Again, so we're long at 42.25. The low came in right on this yellow line that we had marked weeks ago. And then when we got the ABC pattern, this is like some kind of oddball extended fib move. Look at this. This was like the early move, but the Fibonacci's basically just ignored that. Went level 1, 2, 3, 4, or actually, so odd. Actually went like from here, wave 1, 2, 3, 4, fifth wave, and then this ideally is the ABC pattern here, and our long at 42.25 is going to hold up, and based on the fibs here, we will get an extended move. Let me move some of these yellow marker lines down here. 42.25, and then ideally we'll get a move up to the Fibonacci number up here, believe it or not. 75.25. I'll put it just below that so we can see the blue line.
Order pending.
That's the full fib retrace, if you can believe it. So the minor fib retrace at this point is at 53.75, and we're just popping up to that right now. We're long at 42.25. So we're actually watching for 54 to stabilize above that. And the next level up would be 62. And then the 50% retrace of where I measured this huge wave down from. Is 50% is just under this rebound area here where they kind of jammed up here and they sort of failed. Well, sort of. They big time failed, I should say. I'm going to mark this. They're pushing them back lower again. Look at that. Just like a game, you know? A game of volatility. Massive volatility game. I'm going to just dot that line there so it reminds us above this blue micro, or this is the micro fib retrace of 53.75. They dove back down. It's so volatile. Now they're going back up there. Holding above this yellow line, we watch for a move up to the minor fib at 62. I've just marked this blue line because when I fan this out we may not see this here, but that's where I tried the first fib attempt here, and then they collapsed. They failed that. But let's see if we can go back up through 65, stabilizing above 54. So somewhere our target goal is going to be somewhere up above this. I'm assuming they can go up here once they get rid of all this volatility on the sell side and stabilize a little. They can go up through 65.75, blast through 68.75, and then we're trying to target this area just under this full fib retrace at 75. Right, so this blue line converging with this orange line and this yellow line, that's ultimately where we're trying to take this trade. The one good thing about extra volatility and big moves is it creates, obviously a Fibonacci retrace move like that. That's actually, if you can see, it's kind of a minor move in relation to the entire slaughter of the NAS up here. Yow. So we're watching for that now. And, just remember futures trading is very risky and you should only be trading with risk capital. If you have a larger loss day or a larger gain day, it just shouldn't really matter. It's just you're using risk capital and you're just trying to work the deal. Well, look at them taking off as expected. So again, our target goal on this trade is up here in the 73.50 to 75 area, 73 to 75 area. We just had a big blast up higher, right up to the micro or the minor Fibonacci retrace at 62. Let's see if they can hold that up, and they want to blast through that. If so, then the next target goal up is 66 and then up to that 68 level. And we watch for the some real kicker, because that's where we try to launch on the next move up. So far it's working out pretty good. We want to watch for the next move up here. If we can get them above that 68.50, above the 50% retrace. Now what I'd like to do is recommend that our multiple traders take some off there at this green blue dotted line here at 65 or higher. Okay, they just went 65. I think they just went 65 quarter. So you ideally should have taken some off there. I'll make a note of that here. 65 partial. It was fast, I know. I said it before it happened, but just watch for another jump up there. Our goal is to go above this is this whole area of where ideally it's going to get another power punch up into this area, but our first level to take some offs at 65 and we just got them there. What 65.75 is the blue line, and then they went to 65 even. I think I said 65, but the idea is at 65 take some off. 65 takes some off to stay alive. 65 to stay alive, and then we'll see if we can work them higher here. This is partial though. Take partial off at 65 or better, and in a perfect world, there's 65 coming in here. Oh, don't fail me now here. They're going to, in a perfect world, they're going to blast through that, up through the center of the fibs, 68. See, they're going to have to pull them back at a certain point, and then that way the sellers are all smart, thinking, oh, I'm going to resell them, but they're too late. It's typical of the public. They just finally catch on after it's slaughtered, and then so now they pull them back a little, and then ideally, and then they'll rebound and they'll start stopping out sellers above this, hopefully, ideally and hopefully right up into our zone up in here, above this 50% retrace of the whole fib number, up above this 69. This is where a lot of stops will start getting blasted out, because they'll put their stops above the 50% retrace, the real brave ones. They'll start blasting out stops up in here, hopefully driving it right up to this yellowish line there. That's our hope. A 42 quarter long, 65 partial, and this is big scale swing stuff here. They're going nuts on us, gang, and that's that's the way the mop flops. Let's see if we can get this thing working for us. See if we can get them working above 70. Well, for right now, we want to get them cooking back over 62 and holding up over 62, pushing 65, and then blasting through 68. So 65 partial, 42, 52, 62, plus 20.
Order pending.
Minus 42. Plus 22.75 on the partial. And then in a perfect world, like I said, we'll get them back up over 65. We'll get another sonic blast of buyers coming in. And it's a conservative target for the fibs here. It's a normal conservative kind of target. Retrace would be at 60, 75. 50% at 68.
Order pending.
We're just hoping they can hold up and these sellers will kind of go away here. Well, they'll get re-entrenched, and then as the market ramps back up, they'll stop them out. That's the goal. But this trade could take a while. This could take a while to get us up to that 75 area. Certainly worth the wait. So we took the partials there at 65, and we're just trying to see if we can get that whole other idea to pan out. Now, if you want to add back into this, this is the spot right here. I'll make a note of that for those who are trading with us here. Add back, going long here at 48.50, 49, whatever. And I'll mark that in my notes here. Add back to number 10 is at 40. Yeah, we'll use 49. So now we're watching 49 to work its way back up to 60. 62, 65 area again. I mean, I could ultimately create a trading room where I do, 4 contracts in and out every day, like levels, like buy one here, buy one here, buy one here, let one go here, let one go. But that just becomes it's just over the heads of most traders, so long ago I had to establish this approach, just one level you're in and one level you're out. And I think it's very good. I mean, it forced me to be really disciplined just with the idea of one contract, and then people putting multiples on around that. But I've often, because the way I trade is with layering stuff in and out of the market and then peeling it off as the market ideally moves in your favor, or stopping it out at certain signs of failure and different things. And then at the end you just look at your whole thing. But it's virtually impossible to track all those trades at those different levels. But I'm doing one here, basically what I said. We got long at 49 on that re-entry for the multiple traders. And so now we're watching to see if 49 can hold up and they can get some teeth and start working their way back up over 62 and then back up over 65. I sure hope so. I mean, these sellers are vicious, vicious animals today. And I think it was based on what I said. It was like the technicals, what I said off the opening. My 3 day sequencing pattern went back to bearish after Friday's weak ramp up. And then I had the note of my research showing that there were more, the institutions were sitting on their hands as far as buying, whereas the public was going nuts buying all last week. And this is what happens. Today is what happens when you get that kind of imbalance. So it's rather difficult for those who are subjected to, what happened. So now we're kind of sitting in a little bit of a okay, but a little bit precarious spot in that we took a 22.75 partial on the 65 run up. We re-entered long here at this 49 area, and now it's kind of up to the market to not go completely insane on the sell side again, but instead to catch support in here and start working their way back up to 60 again, hopefully with the full normal um, Elliott wave pattern and type of rebound. Now, because we've worked the larger scale and it is volatile and we've stretched out, the fibs more and everything, it's going to be a tricky ride. But volatility breeds volatility, so ideally we'll get some real strong volatility on the upside that'll drive this thing back up to 60 again and kick some butt above 60, jamming it up to our target goal around the 73 area. That's the setup I'm seeing here, and that's the setup we're trading. And we even on this one had a little bonus re-entry price there at 49 for those who want to take it. And that 49 should be held up to the 73. Well, let me just put it 73 for now, but we're watching this zone up here.
Order pending.
Well, it isn't going to be a piece of cake, as I mentioned. They're just it's going to take a little time. But let's see if they can power punch this thing back up here. You should be getting out of your, look at that ES 70, 2712. I said 22 weeks ago. Then I said 30 or lower. It was trying to get a zone because we're up there around 80, and now they're down here. So ideally now, getting out of these hedges, and we're just going off of the raw idea that they're going to boost them up into the third quarter here.
Order pending. Order pending.
All right. Awesome. Okay, so I have taken off all my hedges, doing exactly what I said, and holding my breath like everybody does, and we all do when we're trading. That was, I'm still holding a lot of cash, but I just took off the hedges, so the portfolio, our private hedge fund is not hedged on the stock positions now, but I have a lot of cash still, and I'm just waiting to see. I'm not saying this is the top or bottom, but I'm just not hedged anymore, and I don't want to be fully invested. So it's really just doing what I said. The advice I give here, I just follow myself. So I don't know. I'm not a financial advisor or anything like that. It's just a
Order
bonus
pending.
feature of our room. And if you like the feature,
Order
then you're a
pending.
rock and roller. Look at that. We're getting that right up there to where we're talking about it. That's what I'm talking about here. Let's jam it up to 68. We're looking for a move up here to 73. Let's see if we can get them. Our target is now 73. Let's see if we can plow through this 68 level here, get another punch up higher, and get them going to 73 target there. It's going to take another layer of rebound, I expect, but so far so good. Got to plow them through this 68.50 and just walk through that, get up to the 70s. It'll be great to be back in the 70s, back in the disco area, right? Boy, that was a weird era. of music. I remember I was in the music industry back then. It was very unusual. Anyway, let's see if we can. Great stuff too was coming out, no doubt. But this phenomena came out called disco, and all these people were doing these disco dancing after the whole kind of psychedelic and hippie music had come out. And all of a sudden, the reaction. It's kind of a sociological study. The reaction that was disco. Anyway, the Bee Gees made a fortune. Still around, those guys. Good for them. Gotta respect that. All right, we plowed them right up, as you can see. Let me open this up here. Prices got plowed right up to 68, right to the 50% retrace. I'm looking for them to jam up a little bit harder. As you know, up to this yellow line, let's put it 73. Let's make it a nice even 73. That way, if they go 68 half and they make a surge up towards the Fibonacci retrace level at 75, hopefully, if that happens and they make a surge above 68.50 along the way, um, on the way up towards that, if that happens, they will they'll hit our number there. And what to do with that 49 number? That was just a re-entry for those who decided not to jump in with us at 42. So you can hold that ideally up to the full fruition of this trade. I mean, they went up to 68, so you could also take in approximately 20 points or whatever. But I'm watching for this thing now to blast up through 68. Hopefully on a get a hyper blast up to the fib number at 75, and then, like I said, along the way, if that happens, take out our 73. So we gotta plow through 68 right now to light up the algorithms for another upside run up. So hopefully that will happen, and we'll get that action going here pretty soon, hopefully. Let's see if they can get them going here. Trying to get 68 plowing up through 68, and then like a little, hopefully a little buying firestorm up there as some of the stops get knocked out on that fib 50% retrace. Some of the bears put their stops there. Hopefully they'll plow through those anytime soon here. Knock out a pile of those stops that'll ideally drive that price up to 73 and get us out of this full trade here. And then we'll go back, keep working on this market here if they do that. Let's see here, trying to take 68 out and blast them up through 68.50 at this fib number here, and ideally set off a buying flurry above 68.50 that drives the price up to the 73 area. I'm watching all my indicators extremely carefully here as they approach that number as they're doing now, and let's see if we get a buying flurry above 68 that drives that price up through 70. And like I said, I'm watching for all the signs here. um, let's stay ready to jump out anytime. I'll give the exit at any time on this trade. Okay, let's see if we can get them to blast up through 68 and ideally up through 70 and try to really start working those upper numbers there. Let's see if we can get them
Order
going here.
pending.
Trying to get them going and stay ready to jump out anytime. Okay, here we go. A little more. Stay ready to jump out. We're trying for 73. Trying to get them out at 73. Take them out at the market right
Or
here.
target
What do
filled.
we care? 250, 275. What do we care about a tick, right? 250, 275. There's 73 right there. Tapping 73. We got them out at 275, 72.75. So I was happy to get out. I think they could ultimately go higher, but I'd rather finish off that trade and go back into trading our regular deal here. So 42 quarter long. Okay, let's see. 72.75 exit minus 42 quarter plus oh plus 30 half. So we made plus 30 and a half points on that trade on the big picture for the whole move. Along the way, I recommended at 65 taking partial if you were holding multiples on the initial surge. If you got long from 42 quarter, that was 22.75. And then I had recommended buying at
Order
49 on a
pending.
pullback, and that at 30 at 72.75. Gave plus 23.75. And aren't you glad we got out where we did? Oh, God. 73 was a good estimate, wasn't it? It's the exact. Oh, it's so ridiculous. That was a pretty good estimate to get out. It was the exact high. A double tap on 73 and then blunk. Anyway, I did have some semi short type signals there. Let's see what we got here. Wish I would have taken it short, but I was just happy as a clam to get out that skid him out at 72.75 for us. Exact top of that move. So net 30 half. I just used the raw figure there. Okay, so in wrapping it up, sorry about that little bit of contemplation about. So in wrapping that up, that trade netted 30.5 points on that deal. So now we're going to move on and see what else the cat drags in for us here.